Yes, next let's talk Aspen. We know all about Aspen, of course. It's one of South Africa's best known companies because it's done particularly well. Stephen Saad has built this thing up from a bit player in the generics industry in this country into a global force to be reckoned with, particularly in the hematoma, blood clotting, thrombosis kind of area. That seems to have been where they focused. And infant nutritionals, it should be noted as well. That's baby formula. All over the world now, market capitalization has mushroomed to 143 billion rand. I'm sorry to say, though, it was slightly higher not so long ago. We'll have to talk about that. Price to earnings ratio based on their recent numbers, 27.29. Dividend yield, 0.69%, so you don't buy them for the payouts, that's for sure. But Gary, what's going on here? Results recently, I think people expected more, right?
Yeah, I think
it was at 430 or something.
That's been a painful little slump because I've been invested in this forever. But yeah, looking at it, I mean, yeah, again, it was the currency impact that it was sort of a double whammy on the currency that brought their results down. It's still not a bad set of results at all. I mean, obviously, you know, with a stronger dollar, it's the input costs, whether they're buying, you know, their raw materials from India or wherever,
pharmaceutical ingredients,
they're still going to be priced in dollars, which impacted them a bit. But then it was a double whammy in that the rand also strengthened against emerging market currencies, where they have a lot of their sales and operations. I mean, they're in 100 countries.
There's the share price. So that's what we're talking about. People used to love this company a lot when it was zooming higher and higher, end of 2014, and then this year has been a tough time for shareholders.
It has been a tough time for shareholders, but it's also been the period where they've been, I think, consolidating a lot of their portfolio. I mean, they went on a huge acquisition spree. They're now right-sizing the portfolio. They're getting rid of a couple of non-core stuff. So I mean, they're selling out a little bit in Australia, and I think that's the right. Honestly, that's the right move. I mean, if you look at the Australian economy and their healthcare programs there, with the mining industry collapsing, if you look 10 years out and you see that whole sort of wellness, like a welfare program at least, is not sustainable. So I don't think it's a bad thing for them to be moving out and focusing more on Japan is one of the areas that they're focusing in the
So
East.
clearly what you're saying is they did mega deals, 5 real big deals, including the Australia one. So now really it's more about kind of getting the debt down to levels that are more attractive, using the cash flows.
And getting ready, I think, to go and find
doing a bit of portfolio optimization, because that's what they really do best. They take over manufacturing facilities, move certain production to different facilities, etc.
And also, I mean, Stephen Saad, he's a fantastic deal maker. I mean, their track record speaks for itself. And I think what this is going to do, it's going to free up some of their resources to really, I mean, the whole pharma industry internationally is still in a consolidation period. So there's still going to be a lot of deals to be done. And I think they'll
And his normal modus operandi is to buy things from big global majors that they don't want. So they bought the...
I think the nerves, I mean, just in the share price like him as well. Because remember, they have a deal with Glaxo where they get drugs off patent before anyone else, so that they get to ramp up their manufacturing facilities ahead of all the competition, and really it gives them a huge advantage. So when it was announced that Glaxo was selling out a portion of their stake, I mean, Glaxo's been shareholders for a long time. I think that also just rattled markets a little bit to think maybe Glaxo's not going to, that relationship is weakening. I mean, we've chatted to the company. It's not at all. I mean, they're still it's still just Glaxo taking some profit.
Okay, we're out of time because we've been talking and having too much fun here. Unfortunately, so now the share price has come down. That's all done and well, and if you bought them at 430, that's very disappointing. But from here, what do you see it doing? Is it been reset? People's expectations now been kind of moderated, and from here it can make forward progress again?
Again, I think what you've seen is it's just a PE unwind. So, I mean, the earnings were not bad. I mean, and everyone's now pointing to the currency risk. Currencies can move either way. If you're going to invest based on a currency decision, I think it's a poor decision.
Hot or not?
Definitely hot. I think deals are coming, and I think with a PE unwinding like it is, it's just cheaper than it was. It's still a buy.
Hot for us.